And in fact, historically, the TIPS ETF, going back to the TIPS, have held a very close correlation with gold, 95% if you look back at the past 5 years. But that correlation started to diverge towards the end of 2021, and in particular this year. This is very strange.
Yeah, no, it is. But when you say the gold market right now is not reflecting investor expectations for inflation, I think it is. I mean, the investors are expecting the Fed to succeed.
Even the gold market.
It would appear so. I'm flummoxed. But if you look at investor expectations for inflation, and they think it's going to be 2.6% at the end of next year,
right,
they are believing the Fed's narrative, which means the Fed is going to continue raising interest rates and bring inflation down. And if you believe that narrative, you might ask yourself, why do I need gold? And so I think the gold market is believing the Fed's narrative. And so to answer a question you haven't asked, politicians do that, but they don't say it. They pretend they're answering your question. Yeah. But I'll answer a question you haven't asked, which is, when will gold turn?
I was going to ask that next, but you read my mind. When will gold turn?
Well, obviously a drop in the dollar would help.
Yes.
That's a separate issue. But I think when investors come to appreciate or realize that the Fed will be unable to achieve its target of 2% inflation without a serious recession, when people begin to realize that, that's when you need gold.
That realization would also be bearish for the stock markets, would it not?
I think it would initially, yes.
Okay.
Yes, definitely. And major markets typically. I mean, the scenario I see continues to be for a stagflation. I think we're going to raise interest rates to a point where we have a recession, but we don't bring inflation down.
Do you think we can expect $2,000 an ounce by the end of the year?
By the end of this year?
This year.
No. No.
You said that with a little bit of hesitation.
No, I think that would be a little bit extreme. And you know what they say about predictions. You either predict a price or a time, but not both.
All right.
But no, $2,000 this year, I think, is a little optimistic. I'd love it, but it's a little optimistic.
All right, so give me one of the two.
But next year, I don't see any reason why we wouldn't see 2,000 next year.
Assuming investors wake up.
Well, your words, but yes, assuming they wake up and we realize that the Fed simply cannot bring inflation down to 2% without an inflation. Then gold is so underloved, so underinvested at the moment, but anything that is favorable to gold will see an outsized response, I think.
We have a few minutes left. I'll close on gold stocks and how you feel about that space right now.
Yeah, well, I think the same thing applies to gold stocks that I just said, only twice as much or 3 times as much for the gold stocks. You look at stocks like, say, Barrick, trading net cash positive, making money, even at 1650. Barrick's not alone, I'm just mentioning Barrick, $1,200 cash, all-in sustaining costs. They're still making money. But you've got a huge short position in Barrick. No generalist wants gold stocks right now. So when gold starts to move up and sustains that move up, I think you're going to see an outsized return in the gold stocks that are so cheap. Barrick's trading at a 20-year price to free cash flow low. It has never traded lower on a price to free cash flow. Even when gold was $1,000 an ounce, that doesn't make sense.
Okay, so good valuations on the mining side. Adrian, thank you so much for your thoughts today. Welcome back to Kitco, and I look forward to speaking with you again soon.
Well, thank you very much, David. Thank you for having me.
And thank you for watching Kitco News. I'm David Lin.
Kitco News special coverage of the Precious Metal Summit is brought to you by Nucor Gold.